Welcome to the deep dive. We're plunging into the business world again, looking at how companies are constantly changing, really reshaping themselves.
Exactly. It's not just about reacting, is it? It's about proactive strategy.
And today, we're diving deep into Lemon Tree Hotels Ltd, a big name in India's hotel scene.
That's right. We've spent time looking through their latest board meeting notes, their Q1 results for fiscal 26, and recent press releases.
So our mission today is to really unpack all of that for you.
Yeah, we want you to walk away with a clear picture of where Lemon Tree stands right now. Their performance, sure, but also their strategy, where they're headed.
You'll get the full view, not just what happened, but why it matters. This is a company really transforming itself.
Definitely. So let's kick things off with the financials because, well, they're pretty impressive.
Impressive how?
They just reported their highest ever Q1 revenue. That's the quarter ending June 30th, 2025.
Highest ever Q1.
Okay. And what's really remarkable, as the chairman and MD, Mr. Kiswani, pointed out, is they did this despite the headwinds faced by the industry due to geopolitical tensions and COVID scare.
Right. Context is everything there. Pulling off record numbers in that environment, that says something.
It really does. So looking at the consolidated numbers, Q1 this year versus Q1 last year.
Let's get into those specifics.
Okay, total revenue up a notable 18%, reached Rs 317.4 crores.
18% growth. Solid. And profitability.
Followed suit. Net EBITDA, that's a key measure of their core operating profit, up 23% to Rs 142.1 crores.
Wow. And the margin, did that improve too?
It did. The net EBITDA margin climbed 178 basis points, so almost 1.8 percentage points higher, reaching 44.8%.
That's a healthy margin. Shows good control.
And it gets better further down. Profit after tax, PT, surged, up a massive 139% to Rs 48.1 crores.
130 months, that's huge.
Huge jump. Cash profit also up significantly, 51% to Rs 82.3 crores.
Okay, so strong profit growth. What about the hotel-specific metrics like rates and occupancy?
Good question. Average room rate, the ARR, was up 10% to RSS, 6,236.
Okay.
And occupancy saw a big jump too, up 591 basis points. That's nearly 6 percentage points higher, hitting 72.5%.
Higher rates and more rooms filled, that's the winning combo.
Exactly. And it all feeds into RevPay, revenue per available room. That grew by 19% to Rs 4,523. So really strong operational performance driving those financials.
And you mentioned discipline earlier. What about their debt situation? Hotels are capital intensive.
Right. And they've managed that well too. Gross debt actually came down, decreased by Rs 206 crores compared to last year, landing at Rs 1,658 crores.
Reduced debt. That's always good to see.
And maybe even more importantly, their cost of borrowing fell, down 79 basis points to 8.01%.
Lower debt and cheaper debt, that creates a lot of financial breathing room.
It really does. Gives them flexibility. Now, one quick note for context.
Okay.
While the year-on-year growth is fantastic, if you compare Q1 to the previous quarter, Q4 of FY25, you'll see some dips, like revenue down 16%, PT down 56%.
Seasonality.
Exactly. The company notes point this out, the seasonal nature of the Indian hotel industry. Q1, April to June, is just different from Q4, so those quarter-on-quarter figures aren't really indicative of the full year's trend.
Right. Always important to compare like-for-like periods in hospitality. So the big picture is strong year-over-year growth despite some challenges.
Precisely.
So how are they doing it? What's driving this, especially in that tough environment you mentioned?
It seems to be a mix of things. Strong operations, definitely, but also some smart strategic investments. Let's look at where the revenue's coming from.
Okay, the revenue mix.
Their owned hotels brought in 60% of the total network revenue. That was Rs 300 crores, up 17%.
So the majority still comes from properties they own.
Yes, but what's interesting is the growth in their managed and franchised hotels. They accounted for the other 40%.
40% is significant.
It is. That segment brought in Rs 198 crores, and it grew slightly faster at 18%.
And the fees they earn from managing those.
That's a key point. Total management fees jumped 29% year-on-year, reaching Rs 37.4 crores.
29% growth in fees, that highlights the asset-light strategy working.
Absolutely. And that growth came equally from managing third-party hotels and from their subsidiary, Floor Hotels. It shows a balanced approach growing their own brands and managing for others.
Okay, let's dive into the owned hotels a bit more. Was performance consistent across all their brands?
Not entirely uniform, which is also interesting. Their upscale brand, Aurika Hotels and Resorts, really stood out.
How so?
Exceptional growth. RevPAR was up 58% for Arica. And get this, the hotel-level EBITDA margin was 58%.
58% EBITDAR. Wow. Remind us what EBITDAR includes.
It's earnings before interest, taxes, depreciation, amortization, and rent. So it's a really pure measure of the hotel's operating profitability before those big fixed costs.
Yeah.
A 58% margin is, well, it's excellent.
Shows that premium brand is really delivering on the bottom line. Any other brand standouts?
Keys by Lemon Tree Hotels, which is more mid-market, saw the biggest jump in occupancy rate, up nearly 7.7 percentage points. So strong demand there, too.
And regionally, any hotspots?
Mumbai performed very well. Highest RevPAR at nearly 6,900 and 80% occupancy. Really strong.
80% is great occupancy for a major city.
Yeah. And Hyderabad and Bengaluru also showed strong RevPAR growth, up 23 and 14% respectively. So good performance in key cities.
Okay, so revenue's up, operations look strong. What about costs? Are they managing expenses effectively?
They seem to be. One specific example they highlighted was power and fuel costs.
Always a big line item for hotels.
Right. Year on year, those costs dropped as a percentage of revenue, from 8.7% down to 6.9%.
That's a significant saving. How did they achieve that?
They attributed directly to their investments in renewable energy.
Ah, so those green investments are paying off financially too. Smart.
Seems like it. And this ties into their broader strategy. They're making what they call significant investments right now.
Part of that LT 2.0 plan.
Exactly. Their 5-year plan. It involves renovations, tech upgrades, business development, the works.
So spending money now for future gains.
That's the idea.
Yeah.
They expect these renovation and tech costs, which are currently around 6% of revenue, to drop significantly once the upgrades are done.
How much of a drop?
Down to maybe 2 to 2.5% of revenue. That should happen over the next, say, 15 to 18 months.
So improved properties and lower ongoing costs. That's the long-term vision.
Precisely. It's not just cosmetic. It's about driving future savings and keeping the portfolio modern.
Okay, this brings us to something else quite significant. We saw in the materials the leadership changes and the corporate structure shifts. This feels like more than just routine updates.
Oh, definitely. It feels like a very deliberate strategic realignment. A new chapter, maybe?
What's the official line on why these changes are happening now?
They state it's in line with the succession policy and to accelerate its long-term strategic growth. So it's about succession, yes, but also positioning for future growth.
Let's unpack the key appointments then, starting with Mr. Keswani, the current MD.
Right. Mr. Patanjali Govind Keswani is transitioning out of the managing director role, effective September 30th this year.
Transitioning to what?
He'll become the executive director and chairman for an 18-month period starting October 1st.
So stepping back from day-to-day, moving more into oversight.
Exactly. His new focus will be ensuring a smooth handover, boosting expansion, especially that asset-light growth we talked about, and providing high-level strategic guidance and governance, including leadership development.
Makes sense. Leveraging his experience while bringing in new operational leadership. Who's taking over as MD?
That would be Mr. Neelendra Singh. He's appointed for a 5-year term, also starting October 1st.
Neelendra Singh, what's his background?
He brings 26 years of leadership experience. Most recently, he was the managing director at Adidas India.
Interesting. From Adidas to hotels.
Yeah, so he'll oversee the day-to-day operations, all the business functions. It's a significant handover, bringing in, a fresh perspective from outside the core industry.
That could be very valuable. What about the finance side?
Mr. Kapil Sharma is being elevated. He becomes executive director and chief financial officer. Again, 5-year term from October 1st.
He's been with Lemon Tree for a while, hasn't he?
Since 2004. Over 30 years of experience overall. He's been central to their M&A, private equity deals, financing. Really crucial.
And his role is expanding.
Yes. His oversight now includes technology, procurement, legal, and secretarial, consolidating a lot of key functions under a very experienced hand.
Okay. Any other key appointments?
Mr. Nitin Malhan is reappointed as an independent director, and importantly, Mr. Saurabh Shadal is appointed MD and CEO of Fleur Hotels Ltd.
Fleur Hotels, that's their subsidiary, right? Heavily involved in the managed properties.
Correct. It's a material subsidiary. So putting dedicated leadership there underlines the focus on that part of the business. The whole package points to a very carefully planned succession.
And strategic deepening of leadership, it sounds like.
Absolutely. Preparing for that next phase.
Now, beyond the people, you mentioned corporate structure changes.
Yes. There's some internal reorganization happening. The board approved selling off 100% investment in 2 subsidiaries, Nettle Hotels Private Limited and Matter Stays Private Limited
Selling them to whom?
to Fleur Hotels Limited, that subsidiary we just mentioned.
Okay. Consolidating assets. Were these operating companies?
Apparently not. The notes say they had no business operations last year and only nominal net worth. So this looks like tidying up the structure, streamlining things.
Makes sense. Anything else on the restructuring front?
Yes, and this is perhaps the most intriguing part. They've set up a new reorganization committee.
A committee for what purpose?
Its job is to, and I'm quoting loosely here, consider, examine, and evaluate options, including a potential demerger or transfer of the company's owned hotel business.
Transferring the owned hotels. Where?
Potentially to the subsidiary, Fleur Hotels Limited, on a going concern basis.
Wow. So they're formally exploring separating the owned hotel business from the parent company.
That's certainly what it suggests. It's not a definite plan yet, but the fact they've formed a committee to evaluate it strongly points towards a potential major strategic shift.
Towards becoming even more asset light, maybe spinning off the owned assets.
That could be the end game, separating the property ownership from the management and branding side of the business. It's a model others have used.
Fascinating. That would be a fundamental shift. So with all this going on, strong results, operational tweaks, major leadership changes, potential restructuring, where does Lemon Tree go from here? What's the path forward look like?
Well, first, let's look at their scale right now. As of June 30th, 2025, their total inventory across the group was 18,431 rooms in 226 hotels.
That's a big network. How much of that is operational versus pipeline?
Operational is 10,661 rooms in 116 hotels across 73 destinations.
Okay. And the pipeline?
That's substantial. 7,770 rooms planned in 110 hotels across another 83 destinations. Your goal is to be in over 135 unique destinations eventually.
So significant growth still planned, almost doubling the number of hotels.
Yes, the pipeline is very robust, underscores those expansion plans.
Have they been active recently in adding to that?
Very active. Just in Q1, they opened 5 new hotels, added 392 rooms. Places like Pune, Mira Road, Mumbai, Goa.
And signing new deals?
Yep. Signed 14 new management and franchise contracts in Q1 alone. That adds another 2,273 rooms to the pipeline.
14 new contracts in one quarter. That's aggressive.
It is. Places like Nashik, Greater Noida, Surat, Vrindavan. It really shows that commitment to the asset-light model, signing up partners rapidly.
Growing the brand footprint and management fees without the heavy capital outlay for every property.
Exactly. It's an efficient scaling model.
Are they still developing any owned properties, or is it all asset light now?
They still have 2 owned Aurika properties under development. One in Shimla, which is actually a rebrand of an existing Lemon Tree resort there, 91 rooms.
Okay.
And a new one planned for Shillong, 165 rooms, though that's subject to final approvals. We've already put capital into these.
So still some selective investment in high-end owned assets, perhaps in strategic locations?
Seems that way. It complements the broader asset-light push.
And what's the management's overall feeling about the future? What's their outlook?
They sound confident. They believe once these current investments in renovations and tech are done in the next 15, 18 months or so,
Yes.
their own hotel revenue will increase significantly because RevPR will go up, driven by either higher occupancy or higher rates, or both, thanks to the upgrades.
Okay, so they expect returns from the owned assets.
Yes.
Yeah.
And they're also confident about accelerated growth in our management fees going forward.
So pushing both engines owned and managed.
That's the clear strategy, a dual approach for sustained growth and profitability.
Okay, so let's try to sum this up. What are the key takeaways from this deep dive into Lemon Tree Hotels?
Well, first, they're performing very well financially, best ever Q1 revenue, strong profit growth, improving margins, even with industry headwinds.
Right. The numbers look good.
Second, they're strategically reorganizing. Big leadership changes, a clear succession plan, and this potential restructuring to lean even harder into the asset-light model via Fleur Hotels.
That potential separation of owned assets is a big one to watch.
Absolutely. Third, they're investing significantly in their existing portfolio, renovations, technology, renewable energy, aiming for better guest experience and future cost savings. LT 2.0.
Future-proofing their assets.
And finally, they have a very aggressive expansion pipeline, heavily weighted towards management and franchise contracts, aiming to significantly grow their footprint across India.
So it's not just good performance now, it's a company actively reshaping itself for long-term sustainable growth, balancing owned assets with a strong push on the asset-light side.
That captures it perfectly. They're making calculated moves across the board: leadership, structure, investment, expansion.
Which leaves us with a thought for you, our listeners, as you watch India's hospitality sector evolve.
Think about this. Lemon Tree is betting heavily on strategic leadership, technology, and this agile asset-light approach.
How might these moves shake up the competitive landscape over the next few years? Not just for Lemon Tree, but for everyone else in the industry.
And what does this tell us about how even established companies need to transform themselves to thrive in dynamic markets like India's?
Could these changes ultimately impact your choices as a traveler or observer of the industry? Something to ponder.